Hi there, good morning. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh, and this is ET Now. Now, this is a show where we take you through all the important global stories that we've been tracking for you. Remember, our markets were shut yesterday, but the world was up and buzzing, so we'll bring you the global handover in terms of equity as well as commodities, and in the second half of the show we'll also go domestic and focus on all the stocks that could be in focus in today's trading session and all the stocks that brokerages are also flagging off for you this morning. So with that, let's kickstart the show then. Good morning, Shreyansi. Take us through what the US handover looks like. I'm seeing a solid handover coming in from the US, largely in the positive, so tell us what happened.
Good morning. Yeah, well, absolutely. It's been a very eventful day for the US markets. When you look at the S&P 500 and Nasdaq, both of them posted their biggest daily percentage gains since April 27th. And this was as softer than expected inflation data supported the view that the Federal Reserve may be done raising interest rates. Now, when you look at the small cap Russell 2000 index, that jumped 5.4%, outperforming the broader market, while the rate-sensitive S&P 500 real estate sector gained 5.3%. When you look at utilities, that rose 3.9%. All three registered their biggest daily percentage increases since November 10th, 2022. So now, data showed that US consumer prices were unchanged in October as Americans paid less for gasoline, and the annual rise in underlying inflation was the smallest in 2 years. Well, in the 12 months through October, the CPI climbed 3.2%, and this was all below economists' expectations. Now, this was also after rising 3.7% in September. So, investors also, meanwhile, focused on negotiations by US lawmakers over a funding bill as they face an end-of-week deadline to fund the federal government. So, this is all that is happening in the US markets.
Strong handover coming in from the US markets. The US 10-year bond yield has also cooled off, under those 4.5% mark, because there are talks that a ceasefire in Palestine and Gaza may actually happen, and there are talk about hostage releases as well. So, well, that is what is also panning positivity on the markets. But let's talk about oil then, and oil prices were little changed on Tuesday, pairing early gains on signs that tensions in the Middle East could be easing and on uncertainty about US oil inventory. So, well, there are two factors here that are affecting oil prices. WTI crude at $78 per barrel, under that 80 mark now, and Brent at $82.5 per barrel as we speak. Now, US President Joe Biden said he was holding daily discussions to secure the release of hostages held by the Hamas militant group and believes it will happen. So this is what is also reflecting some positivity on equities as well as crude prices. Crude price also gave up early gains on Tuesday because the market was uncertain as to what the US oil storage reports would show. In early trade, both crude benchmarks rose by over $1 a barrel after the International Energy Agency, that's the IEA, boosted its demand growth forecast, and the US dollar fell on data showing inflation was slowing in the world's biggest economy. Now, the US Energy Information Administration will release its first oil inventory report in 2 weeks. Today, remember, last Wednesday did not release its oil report due to some internal issue that they had. Now, the IEA has raised its oil demand growth forecast for this year and next year, despite an expected slowdown in economic growth in nearly all major economies. Also, another trigger is that a day earlier, the OPEC boosted its forecast for 2023 global oil demand growth and stuck to its relatively high projection for 2024. Now, expectations that the Fed could cut interest rates next spring sent the US dollar down at a 2.5-month low against a basket of other currencies. And remember, a weaker dollar will always boost oil demand by making crude cheaper for buyers using other currencies. So this is why we're seeing the action coming in the crude prices. A certain amount of cool off also coming in over there, but this is on the crude prices. Shreyansi, what's the events that we need to watch out for today?
Absolutely. So this is quite the roundup on crude, but when you look at global cues, it's quite a jam-packed lineup there as well, because UK CPI and US PPI are all on the calendar, and so is China industrial production data. So keep an eye on those data sets. Now, Indiabulls Housing is also going to be mulling issue of bonds. You've also got other companies like Good Luck India that will be mulling a proposal for fundraise. You've got Brightcom that will be mulling new statutory auditor. And so all of these counters would definitely remain in focus. But in terms of IPO action, you also have Ask Automotive that will be listing on the exchanges. So keep an eye on that one. In terms of other events, you've got the World Cup India versus New Zealand semi-final. So keep an eye on that, absolutely. And you've got Joe Biden set to meet China's Xi Jinping. So that meeting would definitely be in focus.
Absolutely, and on the back of that, let's also take a look at some other news that we've been getting for you globally. And it's been over a month into the Israel-Hamas war, and more than 2/3 of Gaza's population has been displaced. Israel admits to carrying out operations against Hamas's Al-Shifa hospital. Hamas, however, denies that it is using hospitals as command centers, accusing Israel and the United States to trying to justify the brutal massacre so far. Now, so far, more than 11,300 Palestinians have been killed in Israeli strikes since the war has begun.
And a long list of things to track on the macro front this morning. Goldman Sachs has predicted that the global economy is set to top the 2024 expectations, largely led by strong income growth and confidence that the worst of rate hikes are already over. The investment bank also forecasts that the world economy will expand 2.6% next year on an annual average basis versus the economist polls of 2.1%.
Well, let's keep it with global economies then, and let's take stock of what the Japanese economy is doing, because the Japanese economy has shrunk at its fastest annualized quarterly pace in 2 years in quarter 3. Provisional gross domestic product fell 2.1% in the third quarter compared to a year ago, after expanding 4.8% in April to June. Shifting our macro tracker to the Eurozone then, where economy contracted marginally, marking the first contraction since 2020. But a number of people working in the European Union rose by 0.2% and 0.3% in the Euro area as well.
And the big macro figure that the market participants will be watching this morning. Headline inflation in the US slowed by more than expected in October. Consumer price index rose by 3.2% on a year-on-year basis, decelerating from 3.7% in September. Now, this was the yearly reading's first decline in 4 months. Definitely a cooler than expected report, so keep an eye on that one.
Well, let's keep it with inflation and shift focus back home then, because India's headline retail inflation took a dip to 4.87% in October, a relief attributed to a favorable base effect as well as easing prices. However, the decline faced resistance from soaring onion prices. Despite aligning with economists' predictions, this marks the 49th consecutive month of inflation surpassing the RBI's medium-term target of 4%. While food inflation held steady, led by a 3.4% spike in vegetable prices, other sectors, notably edible oils, contributed to balancing these inflationary pressures.
Meanwhile, when you look at wholesale prices, they are in deflationary mode for the 7th consecutive month. WPI for the month of October has come in at 0.52%. And this compares with 8.67% that we saw in the same period last year. So just 0.5%. Also, WTI for the month of September was reported negative 0.26%. Now, the sharp drop is due to fall in food prices in the month gone by.
Alright, that's a wrap on everything that's happening globally. So we'll slip into a very short break here, but you don't go anywhere, because when we return, we'll take stock of how the Asian markets have opened up this morning.
Welcome back. Thank you so much for staying tuned in. Let's switch focus to the Asian markets then. When you look at Asia Pacific markets, they jumped today, and this was as they were taking cues from the Wall Street after a soft US inflation reading bolstered hopes of the Federal Reserve nearing the end of its interest rate hiking cycle. Well, data today also showed that Japan's economy shrank during the third quarter for the first time in 4 quarters, amid slowing global demand and rising domestic inflation. Now, Japan's provisional gross domestic product fell 2.1% in the third quarter compared to a year ago. So you've got Japan's Nikkei up strongly there, above nearly 2% up. So that's about Japan's Nikkei. When you look at South Korea's Kospi, that is also in the green. There you have it on the screen. It is up almost 2%. So both of these markets strongly in the green. Now, when you look at Hong Kong's Hang Seng Index, that also opened higher. And right now also it's up about 3%. So you've got Hang Seng also firmly there in the green. Now, when you look at Australia's ASX 200, that is also in the green, nearly up 2%. So all of these markets strongly, firmly in the green. Investors will also be monitoring another key data set from China expected later today. And on the geopolitical front, you also have US President Joe Biden and China's President Xi Jinping, who will be meeting in person in San Francisco for the first time in about a year. So you do have Shanghai that is also moving, driven by all of that. When you look at the implied Nifty Open, you're seeing an uptick coming in of about over 1%. So that is the handover coming in for the Nifty at this point, and that is a very strong handover coming in from the Asian markets as well, Snehi.
Absolutely, Shreyansi. Very solid handover coming in. We're also expecting a 250 gap up start for Nifty. So, well, it's implied to be a good day in trade today. Let's see what happens.
Welcome back. Thank you so much for staying tuned in. Let's switch focus to an IPO coming in from the stable of Tata. Well, after a gap of almost 2 decades, an IPO from the Tata Group stable is set to hit D Street. Tata Technologies, a subsidiary of Tata Motors, has filed a red herring prospectus with SEBI for an IPO. My colleague Anurag Joshi is standing by on the phone line with more details. Anurag?
Yeah, so the Tata Technologies IPO will be open from November 22 to November 24. And this is one of the most watched IPOs in the Indian capital markets. That's because this will be the first IPO since TCS listed its shares in 2004 from the Tata Group, of course. And now the Tatas are planning to sell a stake of which is about almost 61 million shares through the IPO. And if we look at the breakup of that, the biggest shareholder, Tata Motors, that's owning about 74% in the company. And there's a fund called Alpha TC Holdings and a few Tata funds. They totally are planning to sell about 15% of their equity stake. They'll be offering that to the public shareholders through this IPO. Prior to the IPO, there is likely to be a placement of shares to anchor investors. And my sources are telling me that talks on that regard are on.
All right, thanks Anurag for all of those details. Let's move on from one big story to another then, because JP Associate and its trusts have entered a pact with ICICI Bank to lower their debt. According to the deal, JP Associates will transfer 18.9 crore shares to the private lender. Let's take it across to Ankur Mishra to understand the significance of this move and its immediate impact on the company's stock price. Ankur, take it away.
Yes, in a major development, JP Associate has signed a pact with ICICI Bank. Now, this pact has been signed for debt settlement. Remember, there has been long pending efforts by the lender for resolving the debt because the payments were not made in the time in the past, and there was an application which was continuing at NCLT for insolvency proceedings. Now, this pact is interesting because next hearing at NCLT is on November 30, and before that, a pact has been signed with ICICI Bank of transferring 18.6 crore shares to the bank. Now, these shares were already pledged with the bank, but after this agreement, these shares will be officially transferred to the lender. As far as the value of these shares is concerned, if you take Monday's closing price, it comes around rupees 300 crore, 360 odd crore. Now, overall debt is more than rupees 3,000 crore, but this settlement assumes significance because it opens the path for more progress, and a similar kind of debt settlement can be expected with other lenders as well.
Well, thanks, Ankur, for those details. Switching focus to another important story now. Dabur's top bosses, Chairman Mohit Burman and Director Gaurav Burman, are under the lens as the Mumbai police has filed an FIR against the duo in Mahadev betting app scam. Now, the Daa Group has issued a statement categorically denying all of these allegations. Anurag Shah is standing by with more details. Anurag, help us put these developments into perspective.
No, Mumbai police have filed FIR against Mohit Burman and Gaurav Burman. Mohit Burman is the chairman and Gaurav Burman is director in Daa Group. And FIR alleges that Mohit Burman and Gaurav Burman had links to bookies involved for match fixing. And it's also related to the Khiladi app, which is a subsidiary of Mahadev betting app. And Enforcement Directorate is also investigating the Mahadev betting app. There are 31 names in the FIR filed, and among the 31 names, there are two names, Mohit Burman and Gaurav Burman, in the FIR filed by Mumbai Police. So the complaint filed by social activist Prakash Bankar against the Khiladi app, which is one of the subsidiaries. So in the complaint was filed by the Prakash Bankar, and he moved to the court, and after the court order, the Mumbai police filed this FIR. It also says that Chandar Agarwal and Dinesh Khambate are named in the London resident as per the FIR, are the main bookies for the match fixing in cricket match. So that also been mentioned in the FIR. But the statement released by the Burman family spokesperson says that they categorically denied the allegation and firmly believe in the investigation will vindicate their position, and throughout investigation will demonstrate the unfounded nature of the allegation. So the Burman family group has categorically denied the allegation, and they want that the throughout investigation need to be done against this FIR.
Well, that is the latest coming in for this story, but we will also be having an exclusive conversation with Mohit Burman, who's the chairman at Dabur India, later today at 11:05 a.m. So stay tuned for that conversation.
That's a conversation you do not want to miss out on. But moving on then, according to the Confederation of All India Traders report, Diwali season registered a record trade of 3.7 lakh crore rupees. Now, various sectors recorded high sales as well. And my colleague Samir Dikshit filed this report earlier with all the details. Listen into what he had to say.
This Diwali had truly brought cheers to almost every sector. Believing the numbers shared by the Trader Association CAT, consumers have done shopping massively, and in terms of numbers, if you see that shopping has been done to rupees 3.7 lakh crore. Moreover, vocal for local, the theme that has been set by Prime Minister Modi, gained momentum. This is because people have given preference to buy made in India products, and this has also given a jolt to Chinese product or the Chinese multiple items. Believing the numbers that has been shared by CAT, more than 1 lakh crore that the Chinese product have been either discarded or not purchased by the consumers. Now, talking about what sort of sectors the shopping has been done. So, out of this 3.75 lakh crore, nearly 13% shopping has been done related to the food items, 9% regarding the jewelry, even 12% the garment industry gained the consumers' traction. 4% dry fruit shopping has been done by consumers. When we talk about the mithais and namkeens, there also around 3% shopping has been done. Similarly, when we talk about the white goods or the consumer electronics, more than 8 to 10% shopping has been done by consumers. So almost every sector has gained consumer traction. The shopping has been done massively, and this amounts to rupees 3.75 lakh crore. And not just this, the traders believe that this number is going to escalate because still there are some big festivals like Bhai Dooj and Chhat Puja, which will see a shopping somewhere close to rupees 50,000 crore. So the positive momentum in the buying segment will continue for next couple of weeks, and this might the number might even cross the 4 lakh crore mark. So the vocal for local theme has been getting a good traction. People are buying made in India products. The Chinese products are being slowly it is being discarded. And overall, if you see, this has truly brought Khushiyon ki Diwali to almost every sector.
Well, let's also listen into what Praveen Khandelwal, who's the National Secretary General at the Confederation of All India Traders, had to say on the festive sales during Diwali.
Diwali is a festival for everyone to celebrate, and this whopping 3.7 lakh crore is a record in last 75 years. In totality, if we see, every sector of the retail trade has grown to the expectations. Last year, this figure was 2.75 lakh crores. So therefore, there is a 40% jump in this Diwali festivity. Vocal for local program has gone down well, and people have accepted it, and therefore the entire sale of in retail trade was of Indian manufacturing goods.
All right, and a bunch of stocks will be in focus today because MSCI has announced a rejig with 9 stocks added to the global standard index and none deleted. Somit is joining in with more details on this rejig. Good morning, Somit. Take it away.
Well, MSCI has come out with their final index review, and they have added around 9 stocks in the MSCI Global Standard Index. None of them have been deleted, and when it comes to the small cap index, nearly 42 stocks have been added to that and 19 of them have been deleted. Now, flows related to this inclusion and exclusion from the index will likely happen on November 30th. So keep an eye out for these stocks on the Global Standard Index. The stocks that have been added are IndusInd Bank, Suzlon Energy, Persistent, APL Apollo Tubes, Polycab, Macrotech, Tata Motors, DVR, Paytm and Tata Communications. Now, the inflows in these stocks are expected to be anywhere between 137 to 306 million US dollars, and this is expected to come in on November 38th. Now, because of this new additions in the Global Standard Index, the weightage of many stocks will come down, and the major stocks to keep an eye out for in this is Reliance Industries and Infosys, which will see a reduction in the weightage in the Global Standard Index, because of which there could be an outflow in the range of around 106 to 163 million US dollars. And when it comes to the small cap index, host of stocks are expected to get added and deleted from the index. But the key stocks to watch out here are firstly Gateway Distriparks, Ahluwalia Contracts, Lloyds Engineering, DB Corp, PDS, Thangamile Jewellery, Prudent Corp and Thomas Cook. Now the inflows are expected to be anywhere between 2 to 4 million US dollars in these stocks, which could be nearly 1.5 to 4.7 times their 20-day average volume. And when it comes to deletion, it's Thermax, Lind India, Oracle, Solar Industries, Jindal Stainless, Dalmia Bharat, Oberoi Realty and ACC, which will be deleted from the MSCI small cap index. And the outflows in this stock could be anywhere between 15 around 15 to 22 million US dollars, and which is nearly 2.2 to 6.6 times their 20-day average volume. So keep an eye out for these stocks in trade. The flows are expected to happen on November 30th, but the final list is out from the MSCI.
So we'll definitely be keeping an eye on all of those counters. But with this, we're timed out on this segment. See you on the other side.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Now, before we move on with the show, we're just getting some key data from China coming in. China today has just reported better than expected retail sales and industrial data for October, while the real estate drag has worsened. Now, retail sales grew by 7.6% last month from a year ago, above that 7% growth forecast by a Reuters poll. So strong numbers coming here. And industrial production rose by 4.6% on a year-on-year basis in October, faster than the 4.4% pace that was predicted by the Reuters poll. So both numbers have beat analyst estimates. There's strong numbers coming in on the back of that. Take stock of Shanghai. Shanghai is up 0.5% right now. Let's see how this news flow pans out for that index as well. But let me go across to Ansh Jain, who's joining us in the studio. And Ansh, implied open indicating a gap up start of almost 250 points. So what's our FNO setup looking like today?
Oh yes, that's right. And if you'll see for mid cap and small cap, they have been advancing with strong momentum, but Nifty has been resting from last 6 sessions if we'll exclude the motor trading session. And this is because the 100 DMA is acting as a strong resistance up here, which is around 19,500, which is stopping Nifty's up move. Now, if we'll see what happened in FNO segment, then mild short builder was seen in Nifty futures with OI increasing by 0.4%, which is an absolutely neutral stance. Whereas on option front, we saw a very active call writing at 19,500, which is indicating some resistance around here, which is also a 100 DMA level as well. And also put covering was seen at 19,400, indicating bear traders are covering their position, showing Nifty must hold on to this level, which is also showing some support around this level. Now let's shift our focus to what FIS did. They covered 8,200 short contracts. They added 800 long contracts. So in addition, there was a long addition of 9,000 contract on upside, showing bullish stance in the market. So in a nutshell, FNO data shows a bit bullish signal, while Nifty must decisively close above 100 DMA to open its up move.
Well, thanks, Ansh. So bullish signals coming in from the FNO roundup, but what are the stocks that you're keeping on your radar at this point?
Right. So we'll start with Narayan Hrudayalaya first. The company has reported robust financial performance with year-on-year increase in revenue by 14% to 1,305 crore, while the net profit for the period stands at 226 crore, which is up by 34% on year-on-year basis. The EBITDA is also up by 18.8%. EBITDA margin improves to 25%, which is up by around 92 basis points. Grasim standalone performance shows 5% year-on-year decline in revenue, amounting to 6,442 crore. EBITDA witnessed a decrease to 38% to 594 crore, and EBITDA margin at 9.2% compared to 14% in the previous year. Net profit is also down by 18% to 795 crore compared to 964 crore in the same period last year. Kalyan Jewellers reported a year-on-year revenue increase of 27%, reaching to 4,415 crore. EBITDA registered 18% growth, amounting to 314 crore, whereas EBITDA margin at 7.1%. Net profit jumped by 27% to 135 crore. Talking about Wockhardt, company's revenue saw a 11% increase in revenue to 753 crore. EBITDA shows substantial growth of 67% to 72 crore, whereas company reported net loss of 77 crore, an improvement from previous year's net loss of 189 crore. Lastly, let's talk about Ethos. Company reported year-on-year increase in revenue by 32%, reaching to 235 crore. EBITDA shows significant growth of 43%, while EBITDA margin at 15.8% compared to 14.7% in the previous year. Net profit is also up by 37% to 18.6 crore compared to previous year's 13.6 crores.
All right, Ansh, thanks for taking us through that list. All of these stocks will be in focus on the back of those news flows as well as earnings. But let's look at some other stocks that will be in focus on the back of its earnings. And the first one is NMDC. Now, NMDC has reported Q2 numbers that have failed to meet street estimates. But the management's outlook for the second half of FY24 continues to remain positive. Ashesha is here to do all the number crunching for us. Good morning, Ashesha. Over to you.
Well, yes, NMDC has reported weaker than expected set of numbers, and on a sequential basis also numbers look pretty weak. Consolidated revenues is down 26%, EBITDA is down 40%, margins have contracted to 30% versus 37% that the company had reported in the first quarter. So on a sequential basis, margins have contracted by as much as 700 basis points. Now the numbers have missed street estimates on account of higher cost of production. So cost of production jumped to about 1,300 rupees per ton versus 905 rupees per ton that the company had reported in the first quarter. So on a sequential basis, cost of production has risen by as much as 45% on a sequential basis, and that has impacted realizations. Remember, company did undertake price cuts in the quarter gone by, which impacted realizations, and blended realizations too have declined by as much as 15% on a sequential basis. But remember, company undertook price hikes in the month of October, which will flow into the third quarter, and hence realizations are now expected to improve in the second half of the year. Higher seaborne prices are likely to lead to elevated domestic iron ore prices, and hence analysts expect another round of price hikes in the second half of the year and mainly in the third quarter. All in all, numbers were very weak, much lower than what the street was working with, but price hikes could lead to higher realizations in the second half of the year.
Well, thanks, Ashesha. We'll definitely be keeping an eye on NMDC, but let's also switch focus to Manipuram Finance. Well, that one will definitely remain in focus. And they've had a strong second quarter. When you look at their NII and profit, both have soared on a yearly basis. So when I'm looking at the NII, that is up about 25.5%. PPOP is up 36.8%. Now, when you look at their profit, that is also up 36.7%. So that is up at 558 crores versus the previous year's figure of about 408 crore. When you look at the GNPA and NNPA, both of these, GNPA is up at 1.6% versus 1.4% on a quarterly basis. When you look at NNPAs, they're at 1.4% versus 1.2% quarter on quarter. Now, when I'm looking at their provisions, there's a downtick coming in on a quarterly basis in terms of cost of borrowing. It's largely steady, and when you look at their net yield, that also is steady at the same time. Now, when you look at AUM growth for Manipuram Finance in the second quarter, there's an uptick of about 27% coming in on a yearly basis. When you look at their gold and non-gold businesses, the gold business has seen an uptick of about 8.4% on a yearly basis. And when you look at non-gold, that has seen an uptick of a solid 58.1% on a yearly basis. So strong number coming in from that one in terms of return ratios. You've got ROAs that saw an uptick of 5% quarter on quarter, ROEs that saw an uptick of about 20.1%. Now, in terms of their AUM mix, you have gold at about 53%, MFI at 26%, vehicle finance 8%, MSME 7%, and others at about 5%. Now, in terms of Ashirvad MFI IPO, that is one key detail that has come in from Manipuram Finance, and they filed a DRHP for 1,500 crores, no offer for sale component, and net proceeds will be used to meet business requirements. So that, all in all, is the number coming in from Manipuram Finance, NII and PAT soaring. Snehi.
Absolutely, Shreyanshi. Thanks for that roundup. Let's also take stock of what brokerages are keeping on their radar for when it comes to Manipuram Finance. And you've got CLSA that's maintained its buy rating but has hiked the stock's target price to rupees 185 per share. On the other hand, you've got Morgan Stanley also maintaining their overweight stance and hiking the price a little more than what CLSA has done to 200 rupees per share. Let's first see what CLSA is flagging out for Manipuram Finance. They say that the gold loan growth, has remained muted, but profitability seems to be improving. They say it's been an average quarter for the Ashirvad MFI and multiples could re-rate with improving profitability. So that's the CLSA stake. They're also saying that they're giving the rationale behind their buy call, and they're saying that they're seeing lower price to book multiples, and also they're seeing a higher share of non-gold asset under management, that's AUM, for Manipuram Finance. On the back of that, they have given a buy rating with a target price of 185 rupees per share. Let's also shift focus and take stock of what Morgan Stanley is flagging off for this stock then. They have maintained their overweight and hike target to 200 rupees. They say that the profit after tax has beat consensus estimates by 10%. They're also saying gold loan yields have expanded, consolidated net interest margins has stopped estimates, and higher assignment and insurance broking fees. These are the two sectors that have driven this beat coming in for the company's quarter two numbers. On the other hand, they see upside risk to earnings, and they're also seeing more to valuation multiples coming in the future as well. So, they have kept their overweight stance and hiked stock price to 200 rupees. Also at 10 a.m. today, we will be joined by the management of Manipuram Finance. Mr. VP Nandakumar will be joining us to talk about the company's quarter two numbers and also the guidance going ahead. So, that's a conversation you don't want to miss on the channel, so stay tuned.
Well, absolutely. And we also caught up with Ravi Dhami, who's the CIO at ValueQuest Investment Advisors. And he talks about the pharma space and talks about how he expects the manufacturing sector to perform going ahead. Listen in.
Pharma can be now, see, there was a time where you could paint all the companies with the same brush. It was a rising tide. Now it is not the case. It is more a stock pickers sector, I would say. You can divide the sectors amongst US-focused generic players, within that oral solids players, or specialized players like inhalers or biosimilars or specialty generics. Then there are domestic-focused companies like domestic branded generics or diagnostics, healthcare, which is hospitals. Those are broadly the segment. And then there is CDMO, which is the new and upcoming segment. So those are the segments within pharma. And what the area that we don't like is the US-focused, generic formulation players focused on oral solids. if there is an injectable focused or an inhaler focused or biosimilar focused, that is a little bit more specialized. Or you pick, we have picked up 1-2 companies in the pharma space which are very, very, very specialized. You don't find those kind of, you cannot say it's the same healthcare space. A contrast media company, or if that be, like an API, fermentation-based API company, those are very, very different. The drivers are very different from most of the other pharma companies. So we are looking for pockets of opportunities within pharma, but we are not trying to play the reversion to mean in the US-focused generic players.
So Ravi, I just want to bring this point out for our viewers, which is that we are talking about mega themes here. For example, whether it is EV or whether it is energy transition or whether it is manufacturing. Some of these stocks have gone up 3-4x, but if you still feel that these are multi-year themes, those who own them, should they sell them? Because the obvious question is that the P multiples are north of 50-60. Now, this is a sector where growth is there, but the P multiples have also gone higher. So the temptation to book profit is obvious. So why should one not book profits in these stocks which have already run up and where P multiples are expensive?
No, I think this is the most difficult and the hardest part about wealth creation. So yes, you will not go broke taking profits, but at the same time, if you want to really create wealth, one has to develop the conviction beyond this. And anytime you have 10, 20, 30 bagger kind of a stock in your portfolio, it will go through its periods of expensive valuation and probably 2-3 years of period of where the wealth is not created. So living through that period is the most difficult thing, but at the same time the most rewarding in the long run. So there will come a time where probably your cost of acquisition you'll end up getting as dividend, or the daily price movement of your cost of acquisition is that big, that high difference. So I would say that don't focus on the current earnings based multiple. Focus on what is the size of opportunity and where are we in that cycle. If the cycle has just begun, then you should not be in a hurry to book out your profits. If you are getting anxious about the profits, book 10%, 20%, 30%, whatever that gives you the confidence to hold on to the longer term from here as well. And I think that is how you will be able to hold for a long period of time and enjoy the benefits of wealth creation. So, I am strongly of the opinion that it is never the, identifying the stock that makes you money. It is your sitting through the periods of turbulence and coming out on top in the larger trend that makes you the big wealth.
All right, that's the word coming in from Ravi Dhami. But let's shift focus to sports, and the biggest event in sporting is going to happen today. India will face New Zealand in the first World Cup semi-final match in Mumbai, scheduled to take place at the Wankhede Stadium. Now, India has won all 9 matches played in the league stage, whereas the Kiwis have finished 4th with 10 points after winning 5 matches and losing 4. India's unbeaten run and their past performances will be put to the test today. The toss will be crucial, especially since teams batting second have struggled in previous matches at the Wankhede Stadium. However, Indian captain Rohit Sharma has said that the toss will not be of that much importance, and it all depends on how the team comes together and performs today. India's batting lineup, led by Rohit Sharma and Virat Kohli, will need to perform well against a strong New Zealand bowling attack.
Well, absolutely. So I'm going to be glued to the screen, Snehi, and that's my plan for the afternoon. But we do have a very jam-packed lineup for you on The Market, our flagship show. Eye on MSCI rejig is something that we definitely would be doing. Now, Sriram Velayudhan, who's the head alternative research at IIFL Securities, will be joining us to help us with that assessment. After that, we would be speaking to Anand Shah, who's the head PMS and AIF investments at ICICI Prudential AMC. We will also be speaking to Ajit Venkatraman, who's the MD at Finolex Industries, to decode their earnings, and BP Nandakumar, who's the MD and CEO at Manipuram Finance. Now, we also have at 10:20, we'll be speaking to RP Goyal, who's the Director of Finance at NHPC. So keep an eye on that conversation as well.
Alright, with that, we're completely timed out on this edition of Market Cafe. But Shreyanshi and I bid you goodbye. You don't go anywhere because the market will take all the action ahead.